All right, good afternoon, everybody. Welcome to our presentation today of how to zero in on winners and get positioned for 2017, your Black Friday checklist. This is Joe Bacella here at Chaikin Analytics, and we'll be starting in just a moment. Now, presenting this afternoon is Marc Chaikin, founder and CEO of Chaikin Analytics. Also joining us will be Josh Mindlin, co-director of Client Success here at Chaikin Analytics as well. Now, as a reminder, throughout this session, please submit your questions using the Q&A window, which you can access in the upper left-hand corner of your screen. You're welcome to submit questions at any point throughout our presentation. Also, as a reminder, we are recording today's presentation, so keep an eye out on recording tomorrow morning. Now, to begin the webinar, let's turn it over to Marc Chaikin. Marc, take it away.
Thank you, Joe, and welcome, everybody. We started this tradition of Black Friday midday webinars when the market closes at 1 o'clock, and we got a really good response and positive feedback. So here we are again a year later, and hope everybody had a great Thanksgiving. I'm particularly pleased that Josh Mindlin stepped up and agreed to do his first webinar at Chaikin Analytics. But Josh is very experienced. He came to us from Online Trading Academy, where he spent 5 years working with their clients, teaching options-related course, and also doing live training events. And I might point out that Josh has been a participant in our internal stock picking contest, which is going on for the last 2 weeks. It ends the end of November. And of all the 25 people in the company, Josh has been either first or second for the last 4 weeks. So his stock picking skills are being demonstrated on a daily basis. And I know that he's going to share some of that with you. I thought I'd start out by just giving you a quick recap of the market, sort of a preview of this week's market insights. If you followed the markets today, you see that we had another up day. Not unexpected, as the day after Thanksgiving is normally a positive day, seasonally favorable. But I think the key thing to notice is that bonds continue to drop. The dollar continues strong. Price of crude oil has firmed up again and started to move higher. And because of that, and a general feeling that we are going to see new day in Washington, and it's a positive event for the stock market for a whole series of reasons, the S&P 500 has closed above the critical 2200 resistance level. Now, prior to that, the small cap stocks had broken out 4 or 5 days ago to big new highs. They're on a winning streak of now 15 straight up days. And in case you think that that means that the small cap stocks are vulnerable, our colleague John Schlitz in his Morning Insights today cited studies that show in the 8 previous times this happened since 1982, the market was significantly higher 3 months later. So don't confuse overbought with vulnerable. Now, we are heading into a week post-Thanksgiving when the stock market is normally in profit-taking mode. So this may be the opportunity to put some of Josh's ideas into place because it's becoming increasingly more difficult to find stocks that aren't overbought and continuing higher. So very important next week, in my view, to watch the market. The stocks that you're following or that you call out with our screener should be on a list looking for buy signals, or you should be looping through these charts, and Josh is going to show you how easy that is to find opportunities, because it's my view that my long-standing forecast of 2250 to 2300 by year end is now very possible. And short of some major event, I think that we all need to be looking at the market and trying to find opportunities to either put on trades if you're short-term oriented or add to your portfolio if you're growing your retirement. So with that, Josh is chomping at the bit to dig in on his first webinar for Chaikin Analytics, and it's my great pleasure to introduce my colleague, Josh Mindlin.
the warm introduction. Hello, everybody. Thank you again, Mark, for the warm introduction. Hello, everybody. I thank you for spending your time here with me today. We've got some very exciting things for you. Let me just start with my screen sharing here. This is my very first webinar at Chaikin Analytics. I'm excited to be here with you today. I have done this many of times for large groups, hundreds of people in a room, individuals, one-on-one. We'll talk a little bit about me in a second. I came from Online Trading Academy, as Mark had mentioned. I had spent the better part of almost 6 years there, learning from Wall Street professionals, from market makers, from fund managers, from institutional traders, how to find high probability, low risk setups in the market, whether you are doing this long term, building a portfolio for the long term, or doing it short term. I happen to enjoy swing trading, so I focus on that. Options, I do options. I talk to a lot of people about options. So we'll talk a little bit about, we're not going to talk about options today, but that is something that we cover here at Chaikin Analytics for you. But as Mark mentioned, the market is in a interesting place. It's taken a while to get to this spot, but we're finally here. It looks like we are going higher into the close of the year. And what we need to do is understand how we can position ourselves for that. There are going to be some winners in this market and even some losers in the market. There's a great rotation going on in the market, and we'll talk about a little bit about that later as well. So let's get into it. When I first started, actually, before I even get into anything, I want to just mention this, because when I first started looking at Chaikin Analytics as an opportunity for me, I came and I did an interview with Mark, and I sat down with some of the people here, wonderful people that I have now grown to know more and enjoy a lot more than I know them better. And I did a deep dive as best I could into Chaikin Analytics. And what you see on the screen are places where Chaikin is quoted and used, and that's not by coincidence. That's because Chaikin Analytics is a amazing platform for individuals. One of the things that I asked before I took the opportunity here was, before I even took the opportunity, was to see the platform itself. And Mark gave me access before I came to look at it, and didn't take me very long to say, wow, this is great. I can incorporate this into what I'm doing already. I can take what I've learned at Online Trading Academy through the great mentors and coaches I had there, come right over to Chaikin and use this platform to help accelerate what I'm already doing with the knowledge I already have. Not to mention, I get to work for Mark. I understand what it's like to be around people who have spent a long time in and around Wall Street, and what it takes to be successful. And so the opportunity to work for Mark and with Mark has been a blessing and a fabulous opportunity, and I'm glad I took it. So you see some of the things on the screen here, Malden and Barron's and CNBC, where Mark's quoted, and that's because of the great things that we're doing here at Chaikin Analytics, which I am going to show you. So let's just real quick, I'm not going to do Mark did the introduction and went over the market. That's not really what I want to do. I just want to touch on this real briefly. From 2009 to 2014, what we had was a situation with falling rates, rising earnings. It was very bullish. Market went pretty much just straight up. And then we had a situation where we had still falling rates, but falling earnings. And as you noted, for 2015, we essentially went sideways. Now, that was the overall market went sideways. Underneath, there was some rotation going on. And if you understood how to identify that, it was a great swing traders market. It was a lot of fantastic opportunities there for swing traders. And I'll talk about a little bit later how to identify those opportunities using Chaikin Analytics. All right. Now, what we're heading into is a situation where we have rising earnings and higher rates, and this is a bullish scenario, as Mark laid out. There's a bullish scenario, and he thinks the market's going higher. I follow Mark's lead on this, and so what we want to be able to do is identify what sectors in the market are going to get the most out of this bullish scenario, and how we can profit from that, understanding where to be in the market and when to be in and when to be out. right? So a lot of people there are out shopping for Black Fridays. What I'm going to talk to you a little bit about today is how to shop for good stocks, and not just how to shop for them, but what most people out there today are doing is looking for deals, how to get things on sale. And we're going to talk about that today as well, how to identify sales in the market, when something is a good deal in the market. So we're going to talk about that today as well. Now, I have, as I mentioned earlier, I have coached countless individuals, and I've been coached by, as I said, some very impressive people, floor traders. They've got some amazing stories they've told me from their time at the floor. And one of the things that I've learned, and that has been really impressed into me by the individuals that mentored me, that I've been blessed to be mentored by, is that you should have a plan. You should have a plan for what you're going to do. So we're going to talk today about what your plan is in the market, and a good plan can help you. There are really two things that give you an ability to have success, two components of a plan that really determine your overall success in the market. The first is being able to identify what to buy. What are the good stocks? Which stocks should you be in? Which sector should you be in? And having a directional edge. Having a directional edge is part of the equation. The other part is then having a plan and an ability to identify entry and exit points. This is critical for swing traders. It's also very important for long-term portfolio managers, knowing when to trim and knowing when to add to your long-term positions. And so we're going to talk a lot about that today. I have, as I said, coached many people, and I see a lot of commonalities among individuals when they struggle in the market. And one of the things that they struggle with is when to get out, right? At Online Trading Academy, I had a colleague, and he had a saying. It's not mine, so I'm going to give him credit for it, but I think it's perfect. And he would always say that individuals in the market are like kids at the pool in summertime, right? They dive right into the market. The kids dive right into the pool. They splash around. They have a blast. But when it's time to get out, they never want to get out, right? They just want to stay in the pool and splash around forever. And you just can't do that. And it's the same for in the market. People never really want to get out of the market. And I think it comes from an uncertainty, from not having the confidence to understand when is the right time to get out. I'm sure that any of you that have invested or are invested in the market or swing traded in the market have come across a time where you bought a stock, it went up, and you thought, should I take my profits now or not? And you don't really know, and so you go, oh, let me hold on, and you get a little greedy, and sure enough, what happens? That stock just it falls, and then you end up panicking and getting out at break even, or even worse, at a loss. Or there's the other scenario, which I'm sure many people have come across, which is where you buy a stock, and again, it goes up, and you say, great, and you sell it off only to watch it go a lot higher, right? So how do pros identify times when you're getting the best exit point for your stocks? So we'll talk about that today, because I talked to many people in my previous work and here at Chaikin Analytics. That's an issue for people, so I want to talk to people about that. So two things that we're really going to look at today. One, how to find good opportunities, good stocks in the market, what to buy, and then when to buy them. So stick with me, and we're going to get into that. We're also going to talk about how to find good sectors as well, because that's going to be a big thing, right? So not only are we going to find how to bulls and bears and how to use some of the indicators here at Chaikin Analytics that Marc's put together. The platform's fantastic. It has everything you need right on it. So how to understand which sectors are going, we have that in the platform as well, and so I'm going to talk about that also. If you have any questions or anything like that, please, there's a Q&A box that you can chat into. I'll try to answer any of them that I can, but a lot of people on today, and I may not be able to get to all of them. All right, now A lot of the problems that people have come from that information overload. I really like this graphic that the marketing team puts together for us, our graphic teams put together, because it's really true. A lot of people, they watch CNBC, they go to Bloomberg, or they go to Yahoo Finance, they Google things, they get a tip from a buddy, they, I don't know, the bus driver says, oh, I heard this is going to go up. You get this information coming from everywhere. Sometimes it's conflicting information. I got to tell you, there are times where I flip on the TV and they have one pundit come on who says, oh, everything should be bought. And then they say, okay, and on to the next pundit. And that pundit says, no, get out of everything. It's all this conflicting information. And what I find helps people the most is a way to cut through all of that clutter and to get things down to what is actionable, what can help you, what is going to help you make right decisions with confidence. All right, that confidence is key. And so we're going to talk about how we do that with Chaikin Analytics today as well. And time. All right, how we can save you a lot of time. Time is our most precious commodity by far. I always say that money, it comes and goes, right? You make more money, then you go out on Black Friday and you spend more money. Money comes in, money goes out. It goes both directions. Time, one direction. We only have so much time in our day. It doesn't matter how wealthy you are, you have the same number of hours in the day. Warren Buffett and I, we have the same number of minutes in the day. He has some flexibility with what he can do with them, granted, but we both have the same amount of time in a day. So how can we help you accelerate what you're doing so you're not spending as much time trying to sort through all kinds of stuff? One of the great things about Chaikin and Chaikin Analytics is Marc has put together a platform which is fundamentally based, right? It is 85%, the power gauge rating is 85% based on fundamental factors. I've talked with individual investors who are poring over 10K reports and earnings and going through all of these different analyst ratings and the reasons why and looking at all this stuff. It takes so long for them just to get through one stock for them to make a decision on whether or not it has a bullish directional edge or not, whether the fundamentals are sound or not. We have a platform here that does that in snap of a finger, and you real quick get an understanding, get a sense of, is this likely to go higher or likely to go lower, right? There's no guarantee, but having that directional edge is critical. That's what Wall Street has. They have a directional edge. And what Marc has done, which is fabulous, is taken his experience and his time and his knowledge from his career and put it into a algorithm that gives you that same directional edge, and it does it quickly. You don't have to go poring over all kinds of reports. You just get a bullish rating or a bearish rating, and you know immediately whether or not this is likely to outperform or underperform the market going forward. Right? Once you have that edge, then it's just about knowing when to get in and when to get out. And Marc has helped us with that as well. He's put together some great indicators. We use his Chaikin money flow, which is a way to understand whether institutions are accumulating or distribution in the market. Institutions are what move the market. I don't know about you, but when I buy my shares, doesn't really move the market at all. I don't think the market even notices. If any of you out there are able to move the market, by the way, please chime in. If you have enough money to move the market, I'm available for adoption. It's a package deal. Me and my wife, she's a better half anyway. But all kidding aside, the market is moved by institutions, and the Chaikin money flow indicator helps us understand whether institutions are piling in or getting out of that individual stock, and you want to be with the institutions. And so we'll talk a little bit about how we use that later on. So stick with me on that. All right. The power gauge, 20 factors, back tested. Right? And I don't think many people know this, but Marc started with over 200 factors and went through them and back tested them and came down to the 20 that tell us with a good degree of accuracy, are we likely to be going higher or likely to be going lower Is this stock likely to be bullish for the next 1 to 6 months or bearish for the next 1 to 6 months? It's fantastic. As I said earlier, it's 85% fundamental. It's 15% technical. It's like a quantitative analyst at your fingertips. I mean, big firms pay a lot of money to have this level of analytics at their fingertips. They pluck Wharton grads and big MBA people right out of college, right out of their MBA, right out of Harvard MBA, and they bring them down to Wall Street and they teach them how to do their analytics, and they pay them a lot of money to do that. You have the ability to grab that level of analytics for a fraction of the cost, because Marc has leveraged his experience in the markets and experience in Wall Street to give you this at your fingertips. So we'll get into a little bit more about that as well, but it is a powerful system. I'm telling you, the first time I saw it, I thought it was amazing, and I jumped on the opportunity to come here. So here's a quick list of what's involved in the power gauge rating. I don't want to get bogged down in each individual item. It's back tested, so we know it works. I'll go through the results with you, what we have for the past, well, for the lifetime and for the past few years. We'll get into that. But you can see right there, this is what's included. Again, it's about 85% fundamentally based and 15% technically based. All right. So moving on. Oh, covered that. See, this is my first one, guys, so bear with me. I'm used to talking to people face to face. So here's the approach that we have. It's a disciplined methodology. I think that a lot of people don't have the disciplined methodology that the market requires. I think a lot of people feel things. Hey, this feels good. This feels good, but they don't really have a step-by-step approach. And one of the things that I coach people on, and I talk to people on, I do this every week at Chaikin Analytics, is how to go through a disciplined methodology for finding the right stocks and getting in and getting out at the right times. So we start with the power gauge rating. It tells us where we want to be, and then we look at some of the signals, the money flow, the relative strength, some of the other indicators, which I'll get into, which gives us a sense of when is it highly likely that something is going to go higher or not. And then it gives you the ability to find low risk, high probability entries and exits with good, sound stocks with the directional edge you need. All right. So this is a little bit about the power gauge rating. Life to date, as you can see, the average stock goes up about 8% so far, and the bullish and very bullish have greatly outperformed that. It's 50% better almost just on the bullish ones. The very bullish ones are outperformed by far. And I will make a note of this also, the bearish and very bearish ones. It's not just about finding the stocks that are good for your portfolio. It's also about understanding how to avoid the losers, how to get out of stocks that are going to hurt your portfolio. A lot of people don't realize, but one of the biggest things that the Wall Street professionals do is they manage risk, right? They have a really good understanding of when something's likely to go lower to get out, right? So they don't have losses dragging down their portfolios. They have a way to understand when something is likely to underperform. So they know, hey, get out of this. Don't let it be a drag on your portfolio. It's amazing how much easier it is to make money when you're able to cut out the things that lose money, right? Because a lot easier.
Josh, could I intersect here for a moment?
Please, Marc.
And expand on that. There was an article yesterday, or actually Wednesday, that mutual fund shareholders are in for a actually unpleasant surprise, because there are going to be big capital gains distributions because the funds have realized a lot of profits in 2016, and they don't have any losses to offset against it. And that reinforces what Josh just said. Because successful investors tend to trim their losses and get out, they do that early. on average. Even though they may not outperform the market necessarily, they follow that discipline. So reinforcing what Josh just said, if you own mutual funds, you're in for a rather unpleasant surprise because you're going to have to pay a tax on those realized gains. And part of the reason is they didn't have losses to offset against. And so this, I think, is a really important point to understand. Managing risk by avoiding stocks and getting out early. So back to you, Josh.
Thank you, Mark. Yeah, that's exactly right. What Mark said is exactly right. Understanding, and the mutual fund thing is also important. We talk to people about ETFs. I'm sure you guys out there have heard about ETFs, and we have a great way to look at ETFs and understand whether they're likely to go higher or lower if you want that kind of diversity in a fund without having to be in a mutual fund that apparently is going to start taking some hits. But yeah, getting out of stocks that are likely to underperform is key. It's key to what Wall Street does. They understand how to manage their risk. They understand how to cut their losses, and that's big to their performance. This is just 2015, and this illustrates it more than anything could. Just imagine had you avoided the very bearish and the bearish stocks out there. Right? Imagine that you opened up your portfolio the day after you signed up to Chaikin Analytics, and you went through your portfolio and you saw, holy cow, I've got a handful of stocks that are rated very bearish. Well, then you would know, hey, I should not be long these stocks. Let's clip them out, let's prune them, and let's move into stocks that are likely to outperform. Right? Stocks are going to help you stay ahead of the market. And that's what we're trying to do here. We do it every day with people. So avoiding losers, just as good as being able to find, just as critical as being able to find the winners that are likely to go higher. I think that's critical. I don't think that gets talked about enough, honestly. Mark, you're absolutely right. That doesn't get talked about enough. I know that we talk about it here at Chaikin Analytics all the time, but I don't think it gets talked about enough in the media and things like that. But you know what? That's not what they're out to do. They're out to keep your eyeballs glued to the screen. We're out to help you avoid losers and find winners. So let's stick to that. To that end, we have a partnership with NASDAQ and First Trust, and we have portfolios. We have closed-ended funds with First Trust. I believe we're on our fourth now closed-ended fund. All right, now why would First Trust, a big institution, a big financial institution, have a fund done by Chaikin Analytics, right? They're going to put their clients' money into this. There's only one reason, and that's because it works. That's because it's going to be beneficial for their clients. And they're on the fourth one now, so it's definitely been working for them. So
it's actually five, Joe. The fifth one was launched on Wednesday.
Oh, fantastic! See, look at that, 5. Lucky number 5. Well, it's been lucky number 1, 2, 3, and 4.
Equally weighted. So there's the discipline right there. 20 stocks equally weighted, all filtered through the power gauge. So it's really the summation of everything that we've tried to teach our clients at Chaikin.
I think it's fantastic. I think it's a real testament, Mark, to you and what you've built here and what you've put at the fingertips of individuals. I mean, the individuals I talk to, they're just I talk to architects and accountants and all kinds of people, lawyers, doctors, individuals, right? Just individuals. And these individuals are able to go through and do the same thing that a big institution like First Trust is doing. And I think that's so important to highlight. So we're on number 5 now. I think that's great. So I look forward to 6, 7, and 8. All right. And John Carter, some of you may know John Carter. We're big fans of John Carter. He's a fantastic trader. He does a lot of option stuff as well. A lot of his subscribers subscribe to us. We know that our subscribers also will subscribe to him. But he wrote this for us. It doesn't shock me at all. It fits with everything else that I've learned about Chaikin Analytics, which is understanding how to get an objective direction for stocks is key. It includes fundamentals and technical analysis, so it helps you not only select, but time. Those are the two sides of the equation that you need for success. Picking the right stocks plus picking the right entries and exits, that's what's going to give you the right results that you're looking for. That's what's going to give you the ability to go out and spend a lot of money on Black Friday by earning it through the market. Someone like John Carter recognizes this, First Trust recognizes this, and I think you'll recognize this as well, especially as we go through a little bit more of the examples that I have for us today. Right? So let's start on focusing on good opportunities in the market. How do we do that here at Chaikin Analytics? Well, one of the things we do, and this goes to saving you time, is we have something called Chaikin Hot Lists. Lists that are objectively put together, right? Lists that are just taken right from the power gauge ratings, right from the factors that we're looking for, very bullish lists, stock turnarounds for you to be able to identify trend changes early on and get into trend changes early on. These are some of the things that we just hand you, basically, which is fantastic. You can just go right in and you can look at very bullish stocks, very bearish stocks, know which ones to be in, know which ones are likely to go higher, which ones are likely to go lower based on an objective, back-tested, proven rating system that Marc's put together for us. So we have those hot lists. One of the things we have on those hot lists are what we call classic bulls. These are stocks that have a bullish power gauge rating. They have a strong money flow and a strong relative performance. What does that mean? Now you can see we have an example up here. This is a recent example that I just pulled from I pulled this earlier this week, I believe, from our hot lists. It's a bank group, which is a strong sector right now. And you can see the money flow there, the relative strength strong, and the power gauge is all strong. These are our classic bulls. Let me bring that up so you can see it a little bit more clearly. And let's just make some notes here. You can see we have right here, this is our strong money flow. This is Marc, famous for his money flow indicator. This tells you whether there are institutions that are coming in to this particular equity or piling out of this particular equity. And so you can see that money flow has been strong for a while, even when the stock was going sideways. And that's a big tell right there. The stock's going sideways, but the money flow is strong. Eventually, there's going to be a point where this thing just takes off because you have institutions. The institutions that move the markets are accumulating this, and you want to be a part of that accumulation. You want to buy stock with these institutions, and this is one way that you can do that by using Marc's money flow indicator. So you can see it went sideways, but we had nice money flow. Down here we have the power gauge. This thing has been bullish for a while. And then right here, right above that, we have the relative strength versus the S&P 500. Now, why is that important? Well, the S&P 500 is an index. It's an average, right? So what does an average have? Well, an average has stocks that are ahead of the average and stocks that are behind the average. And you don't want to be in stocks that are behind the average. That's just going to put you behind the average. You want to be in stocks that are ahead of it. And so what we do is we put this right in front of you so you can quick and clearly identify classically bullish stocks. All right. So our subscribers, going back to middle of this year, May, June, July, we're able to understand that this is a stock that not only is it rated strongly, and so we know scientifically it's proven that it's likely to go higher because the power gauge rating is back tested. It's objective and it is back tested so that we know it produces a certain result going forward. So you have that. You know that this one is now, it flipped. It flipped really quickly from dragging the index down to pulling the index along. And you want to be in stocks that pull the index along, all right? And then you have the money flow telling you, hey, institutions are piling into this thing. I want to pile into it also. I want to be with the institutions. And so this is one of our classic bulls that we have to show you. I've got tons of examples of these. I don't have enough time. I want to try and keep this to under an hour. I don't have enough time to go through all of the examples that I could show you, dozens of stocks that we could show you on this, but you just have to keep it to a couple select ones that I picked out. So next we have our classic bears, right? Just like our classic bulls, these are stocks that are just on the other side of that coin. They have bearish power gauge ratings. And as you saw, things with bearish power gauge ratings likely to underperform quite a bit. Poor money flow. Institutions taking money out. They're taking money out of this stock. If you were in the stock and you saw that, you would know with confidence to also take money out of the stock. And poor relative strength. This is one of the things that's acting as an anchor on the overall index. You don't want to be in things that are sinking to the bottom of the seafloor as the index chugs along, right? You want to be in the ones that are part of the engine that's driving it forward. You want to be what's pulling the index along, not what's in knocking it down. And you can see right here, this is Estee Lauder. It's one of cosmetics. You can see that we tell you, hey, the trend is weak. The industry is weak, the money flow is weak, the relative strength is weak, it's bearish. There is no good reason to be in this stock. In fact, this is a great short candidate. And we'll talk about how to identify opportunities to get in. For those of you out there that short stocks, this was a fantastic short candidate. As you can see, the market flipped on it, the relative strength flipped on it, the power gauge went bearish. You see those two together, you have poor money flow coming out, money's coming out of this, clear as day to get out of it. Marc puts this right in front of you. Chaikin Analytics puts this right in front of you on one screen. All right, it's one of the reasons why I was so excited to come here, was everything's right at your fingertips, and it's so quickly able to look at something. I got to tell you, I do screens, and we'll get into screening in a second. I do screens every Monday morning. I have a set screens that I do. I run the screens, I generate a list, and then I'm able to flip through the list pretty quickly because Marc's put everything right in front of us that we need at our fingertips to be able to understand when to get in and when to get out. What to buy, what not to buy. We call these the dynamic duo here. I like that name, little Batman and Robin. Helps you, the power gauge and the relative strength. When you see these two together going in either the bullish direction or the bearish direction, you are highly likely to have superior returns on the market, whether that's shorting the bearish ones or buying into the bullish ones. It really gives you an advantage over everybody else out there that doesn't have access to the directional edge that we at Chaikin Analytics give you access to. All right. We also give you buy and sell signals. I am going to go through some of those with you today. I don't want to get into all of them. There's a lot there. Again, these are things that we teach you. When you join Chaikin Analytics, the first thing we do is we encourage you to go through a orientation webinar. It's quick, it's easy. Our colleague Michelle in the client success team does them. She's fantastic at it. It gets everybody up and running on the platform really quickly. If you join Chaikin Analytics, we could have you on one on Monday. Right in and ready to go. So we've got a lot of buy and sell signals. I won't go through all of them today. There's just too many, but these are just signals that are generated by the platform that give you a quick way to identify what opportunities might be in front of you. Right, and that's key. How many people out there have missed opportunities? They've looked at something, they thought, maybe not, I'm not sure. They didn't have the confidence, and then before they know it, they turn around a day later, 2 days later, and the thing's taken off. They go, nuts, I knew I should have done that, right? It's always easy to see it in hindsight. What we're doing is giving you the foresight to understand when is a good time to get in and what is a good stock to get into. Now, following the signals, and most important, there's a reason, a disciplined approach. One of the things I don't think a lot of people out there have is a plan, right? They don't have a disciplined approach. they often will get into a stock because they've done their research. They took an hour to read through all these reports. They maybe they look at the chart too, and they say, okay, this looks good, all right? But they're not basing it on a plan that they could replicate over and over and over again. That's one of the biggest things that gives individuals in the market an advantage. I got to tell you, and I know this for a fact because I've learned it from people on Wall Street, from guys that run hedge funds, right? There's a guy that mentored me. His name's Chris. He's a hedge fund manager, current hedge fund manager. He's really good at what he does. He gets one paycheck a year. On January 2nd, he gets a paycheck forever, however he did the year before. So you really have to be good if you're only collecting one paycheck a year. And that paycheck better be good because it's going to last you the whole year. But one of the things that he really stressed to me was, Josh, you need to have a plan, a way for you to engage the market with discipline so you're not making emotional decisions in the moment, so that you're able to look at an opportunity, look at your plan, and very quickly say, yes, this is good, or no, that's not a high probability setup. That's not a high probability. The odds are not in your favor. You don't have the edge on this one. Stay away. So having a disciplined approach without emotions is critical. I coach people. Joe and the rest of the client success team here is dedicated to helping you develop a plan for you. We sit down with people all the time. We talk to them about what their goals are, what their time frames are, what their risk tolerances are, and how to then turn that into a plan using Chaikin Analytics to get in and to get out, to know when to trim positions if you're managing a big portfolio, or know when to take profits if you're doing quick swing trading. Right? So a disciplined approach is very, very, very important. I know that the men and women on Wall Street, they know exactly what they're going to do. Not what's going to happen in the market, but exactly what they're going to do if the market does this or if the market does that. They have a plan. They know exactly how to engage it, and they just execute unemotionally day in and day out. And Wall Street is incredibly profitable because they're able to have a disciplined, unemotional approach. And so what we do is we help you put together the exact same thing, right? We could be doing this with you next week if you wanted to, helping you understand exactly what you should be doing, a plan for you to help you be engaged unemotionally with the market. Now, we have a powerful stock screener. I mentioned it earlier. You can go through all kinds of different scenarios and setups. I happen to run this screen earlier this week. I apologize, it looks a little fuzzy. This is usually why the graphics guys don't let me touch anything, but I went rogue on them. I put in my own screen here from last week, and you can see I just looked for stocks in the S&P 500 that are ranked very bullish, that have good relative strength. And here I'll point out you can see that right here. So here I just said, hey, S&P 500, that's all I want to see. And I want to see only the stocks that are very bullish, ones that have good relative strength. There's an old adage, rising tide raises all boats, and you want to be in good boats, rising tide. You want to be in those bullish industries and sectors. We'll talk more about that, but we help you identify those, tell you which ones are the sectors that are doing well, and then you can just scan right for those. And then what did I do? Well, dynamic duo and classic bulls, strong money flow, strong relative strength. All of a sudden, and this is preset, by the way. This is a preset screen that I have set up. I click 2 buttons, takes me 3 seconds, and poof, I've got a set of stocks now that I can look through and decide whether or not they're close to entry and exit points. But right there, it tells me what stocks I should be in. And you'll notice that this picked out a number of stocks here in the financial sector, which is doing very well. It picked out a number of stocks in a little bit in the tech sector, the F5 networks and applied materials, some insurance ones. These are all sectors that are likely to outperform going forward. I had a chance to sit down with Marc earlier this week, and we were chatting, and one of the things that he mentioned to me, which I'm going to take and use, and you guys should take and use this too, is a good little insight that you get from being around guys like Marc, is he said, sectors that perform well going into Thanksgiving, going into this time of year, going into Black Friday, are typically the ones that perform well, and there have been studies that show this, perform well going into the end of the year and into next year, into first quarter 2017. So if we can identify those sectors now, think about the edge that gives us going forward for the remainder of the year and into next year. All right. So that was a very helpful bit of insight that I got from Marc that I plan on putting right to use right away. So these are the stocks that showed up. Let's take a look at some of them. I pulled some examples from them. You can see. Oop. This is F5. And let me just point out a few key things right here. One, you can see that we had the bullish personality change, right? We went from a neutral power gauge rating and poor relative strength, and then it flipped. Bullish power gauge rating, bullish relative strength. You can see the money flow came in. Let me just highlight some of these things right here for you, right? So we have money flow, strong, going across. Right here, we have the flip, bullish and bullish flip. And what did the stock do? Right? Followed it. The market agrees with the model. And you can see before that what was happening. Things were going down. There was money coming out of it, right? You can see the stock went down. There's poor money flow, poor power gauge rating, poor relative strength. It was going down. This was a time you could have gotten in and understood, just by understanding how to look at the indicators that Marc puts in front of you. The screen gave me the right stocks to be in. The indicators tell me when to get into them. Makes it real easy to understand when to get into them. You'll see there are a couple opportunities here to jump in. If you were a short-term trader, one of the things that people tend to hear is you're not supposed to catch a falling knife, and all of these don't buy on weakness sort of things. But that's because people don't have a plan to understand when is something likely to turn around. And we can see right here, right? We came right to the bottom of these Chaikin bands. These white dotted lines are proprietary bands. They look like a Keltner channel or maybe a Bollinger band, but they're proprietary bands Marc put together. They help you understand the dynamic range of a stock. Right there, you can see, came right down and touched the lower band. We did that while, again, another proprietary indicator that Marc developed is this overbought, oversold. If you know about RSIs and stochastic and MACDs, it's similar to that, but it has Marc's proprietary math in it. It does a great job of following the short-term rhythms of a stock. I rely on this quite a bit, along with the money flow, relative strength, and power gauge for timing my entries and exits. You had an oversold signal here. You came down to the bottom of the bands. You had good relative strength, good power gauge rating, money flow strong. That's a high probability, low risk entry point right there to hop board an uptrend. You had this a couple of times here as well, right? You had it here, and you had it right before earnings, right there, which would have gotten you into a good opportunity. A couple of opportunities. Had you not caught this when the personality change happened, you had plenty of opportunities to jump into this along the way.
Josh, before you leave that slide, could I just add something here?
Yeah, perfect. I was about to move on. Please.
Yeah, we added news to Chaikin Analytics 2 months ago, and if you look at the bottom of the screen, and Josh, why don't you highlight the bottom right? F5 Networks receives buy rating from Drexel Hamilton. Now that's a fairly well-regarded research and money management firm.
Sorry, Marc.
And
there you go.
You can go back.
There you go.
But here they are with the stock having moved from 90 to 145, finally coming to the party with a buy recommendation. Now that may work out because the stock looks like it may go higher. It's also a rumored takeover candidate, and there's going to be a lot of M&A activity in tech in 2017. You've got Qualcomm taking over NXPI, and so there's going to be consolidation. But the key here is that following the methodology that Josh has just laid out for you, you don't have to wait to hear about this in Barron's or get a buy rating from a brokerage firm who's apparently late to the party. Because as Josh has been emphasizing, Chaikin puts you in a position, if you have a plan based on this methodology, to find these stocks sooner, before they move, in the early stages of a move. So I think that's really important to understand. And with news now in the product, you don't have to go off to your online brokerage account to see the news, or to Yahoo Finance or CNBC.com. And we also have one-day chart in there. I don't know if Josh is going to give you an example of that, but everything you really need is in the screen that you're looking at. So with that, give it back to Josh, who I'll give you some online feedback. You're doing a great job, Josh. You put me to shame here. I may be put out to pasture in Vermont here, where I'm spending Thanksgiving.
That's very kind, Mark. I can't replace you. I need to learn more from you, but I appreciate that. But Mark's absolutely right. The key is to identify these moves before they happen, or to understand which moves are going to be continuing to happen, so that you can hop aboard and catch as much of that move as possible. In a few minutes, I'm going to get to, hey, how do you understand where to get out? If you're a swing trader, short-term trader, just looking at this example here, you can see you get in when we are at the bottom bands and oversold, and you get out right here when we hit the upper bands and we are overbought. That would have taken you 2 weeks for some quick profits right there, right? And if you're a longer term portfolio manager, you're not interested in swing trading, which is great. It is for some people, it's not for others. We talk to people about how to fit this and what they're doing all the time. How to understand when there's a personality change, because just like we're able to identify these bullish opportunities when the model says, hey, we're going from bearish to bullish, we're able to understand that the other way around. Just from personal experience, I have shares in AT&T, and I wish I had this slide. I should have put it in, but I don't. I could have hundreds of examples. We don't have time for hundreds of examples, but the market and the model, it told me, it said, hey, this is going to turn lower soon. You should take profits, or buy a put, or use the options market, sell some calls, or just be prepared that you're going to have a little bit of downside. And so either weather it and wait for it to turn, or get out and buy back in lower, right? And take advantage of a higher yield. So for you guys that search for yields out there, we can screen just for high yielding stocks that are bullish. Right? Imagine just being able to, in a minute, identifying all the stocks in the market that have the odds of going higher and pay you a good yield. So not only do you get the yield coming in every quarter, but you get the appreciation, you get that alpha as well. I think it's very powerful. It really helps you juice your earnings going forward. All right. So let's move on here. I've got a couple other examples. I don't know if I'm going to be able to get to all of them. It's a lot. So here's applied materials. Again, this is a classic bull, a number of opportunities. You can see the buy signals on the screen right there. They're clearly marked. You can see the little circles, right? You can see my circles. You can see the little green triangles. These are all your buy signals to get in that we automatically send you. Right up here in the top of the screen, you can see the overbuy, oversold signals. This is a stock that I've been watching for a while, that I've been in and out of, and you get these nice, clear, low risk, high probability entry and exit points. And I come across these every day. I was, one of the biggest problems I have is I have so many opportunities that are bullish and highly rated. I have to, I only have so much capital. I got to pick the best of the best. And I have a plan to identify what is the best of the best. And we'll help you to do that also, so that you can quickly go through the list, right? I had that list of 20. You can quickly go through the list and find the best opportunities in that list, right? Whether it's long term or short term, this is going to help you understand when to get in, when to get out, right? Here's another example, Bank of America. These are the banks that have been on a tear recently. I got a couple questions this morning in my inbox about the banks and where they're at, and I tell everybody the same thing, because it's the same disciplined approach. Watch the power gauge, watch the relative strength, watch the money flow, use your bands for your timing, your entries and exits. If you're doing this long term and you have just right here, you can see strong relative strength, bullish power gauge rating, right? Money coming into the stock. And what do you get? Move higher. Timing, you can see where my red arrow's on there. Again, we came right down to the bottom of the bands here. We did it while we were oversold. Boom. Short term, know when to get out, quick pop, in and out. Each one of these green bars here, by the way, is 1 day. So we're looking at like a week and a half to go from high 14s to mid 16s. That's a great percentage for a week and a half of work done in less time than you can imagine, because it's just so quick to be able to pull up the list that you want with the criteria you need, and then flip through them quickly and understand where's your opportunities to get in and get out. All right. So let's move on here. And I've got a bunch of these. I don't know if I have time for all of them. I want to wrap up here in the next sort of 10, 15 minutes or so. But I think that it's important to show everybody how this works and how simple and easy it is, and why I was so excited to come here after spending time with market makers and institutional traders to work for Marc. Is I took one look at this platform and I immediately knew, hey, this is great. I can use this to help what I'm doing with my IRA. I gotta tell you, I manage my wife's IRA as well. She's thrilled with how we're doing with Chaikin Analytics. It's been great. You can see right here, we anticipate the swings, the relative strength changes. The power gauge anticipated this beforehand, right? Right there, it already anticipated this bullish change, confirmed by the relative strength. There's your dynamic duo, and then off we go, off and running. Right. Same thing for understanding when to get out. Here's another example. I have so many of these examples. I don't think I have time to go through all of them. This is a small cap stock outperforming again. You can see on the bottom here, the power gauge again changed right ahead of the relative strength. The relative strength changed, and poof, off and running. Again, these are the sort of opportunities that are quick and easy to identify. You can see up here, we have all of the, hey, where's my, I guess this comes with the territory of being my first time on the webinar. You used to have all of the factors right here. You can break them down if you want to look at them individually. You hit on that plus sign and it breaks down. All the factors are right in front of you. It gives you the power gauge rating right there. The technicals are right there. It's fantastic. It's easy to understand. And the same thing that helps us get in helps us understand when to get out. So if you were a short-term trader and you were holding this and you had caught this move higher, well, look, power gauge range goes neutral down here, money flow changes, stock goes down. I got arrows all over the place now, right? But you can see stock follows the rating change and the personality change. Would have had you get out and then understand when to get back in, off and running. So Let's see about the other side of this. I think I have some slides to look at the other side. This is from one of our subscribers. We get these letters all the time. He was talking about buying Sun Edison, which I don't know if any of you know, did not have such a good run, but he wasn't using Chaikin at the time, unfortunately, and he watched it go from 15 to 1. Here's Sun Edison. Again, look, it's amazing. People want to overcomplicate it. I mean, I talk to people that have 80 different moving averages going across their screen. They're using an RSI, a MACD. They're using 14 different indicators. You can barely even see the price bars on their charts. They've got so many things going on. They got a stack of papers. Looking through them, they've got, they want to know if they should buy Goldman Sachs. They've got Goldman Sachs 10K report. It's like 90 pages long. They're trying to comb through it to find some tidbit of information that's going to give them the edge. Spending tons of time to do something that frankly, you can lean on Marc and Marc's experience. Stand on the shoulders of giants. That's the key. And Marc has, as a giant in his own right in this field, he has given us a powerful system to do just that. You see the relative strength changed, the power gauge rating changed, money flow changed. What happened to your stock? Changed. All right. And then there are a couple of good shorting opportunities here as well that you could have had for those that would like to go short of the stock. This would have been a great opportunity to either take profits and get out. And this goes back to that avoiding pain, right? Avoiding those losses. Can you imagine how much you would have to make to avoid, to make up for a loss like this, right? If you just avoided this loss, all the better, right? It takes a lot more gains to make up for losses. The bigger your losses, the much bigger you need out of the gains. And if something loses 50%, you need 100% gain to make that up. How often are you going to get the 100% gain? Stay away from those losers. And this is going to help you do that consistently, right? And that's the key, consistently, because it's the same approach over and over and over again. It's wonderful. It becomes almost monotonous, right? Can you imagine making money being boring, right? Just because you do the same thing over and over and over again. To do that and just have the confidence to know, hey, this is likely to go higher. This is likely to go lower. This is the good entry point. This is the good exit point. So I can't say enough about it. Here's another one. This is Solar City, and you get these. I wish I would have put in the some of the high flyers, some of the things that are talked about all the time in on CNBC. Some of the names that floated out there. You would have seen this in the high flyers as well, understanding when to get out of them. Tesla comes to mind, things like that. They're really volatile, and this gives you an edge to understand when. This had a ton of opportunities. You have a bearish rated stock here. This is, I guess, for if you like puts or shorts, right? Downward sloping long trend line. Terrible money flow. Terrible power gauge rating, terrible relative strength, down goes the stock. Where are your entry points? Well, what do you have here? Overbought, top of the band, out you go. Same thing here, same thing there, same thing here, right there. 3 opportunities to get short this stock for big moves. Now, this first one sure didn't quite make it all the way to the bottom, but again, a disciplined methodology. You're not going to be right 100% of the time, but we also teach you how to understand when you're going to be wrong and how to keep your losses small. So understanding, hey, this didn't quite make the move I wanted. Let's get out maybe for a little bit of profit. It looks like it's going to give us another opportunity. Sure did. A few weeks later, big move from 30 to 20. That's like a 30% move in 2 weeks that you could have taken an opportunity on right there. So, just clear, easy, disciplined, repeatable approach to the market. So there you go. All right. I think that I've given you a ton of good good examples here. Let's talk about how you can get involved with Chaikin Analytics, right? So just like, oh, this talks to confidence. I've got a bunch of slides about confidence. I promised you guys I didn't want this to run too long, so I'm going to try and wrap it up quickly. But you should give us a call. The number's at the bottom of the screen. You can have a better night's sleep yourself. You know, you can have a coaching conversation with myself or Joe or anybody in the client success team next week. We can talk to you about how to get up and running really fast on this. A couple of other testimonials here that I can go through. It really is fantastic. One of the things that we do here, I didn't touch on this, I'm going to do this and then we're going to wrap it up, is understanding, and these are right below, right above the hot list that I showed you earlier, the classic bull and bear hot list. Right there, these are the sector views, so you know which sectors are doing well. You see right here, we have the S&P 500. Here are your sectors that are bullish above that. What is it? Financials, technology, right? Your industrials, some of the things that have been just taken off to the moon. As I mentioned earlier, the sectors and subsectors that have done well into Thanksgiving are likely the ones that are going to do well into the end of the year and into 2017. So this is a great way for, if you're looking at your portfolio and looking to get positioned for the next year, at least for the next 6 months, where to be. And hey, maybe I should get out of some of the sectors that I might be in. They're not performing that well, and they're likely to continue to perform poorly. Cut those losers. We give this to you all in our pre-made lists for you. Right? You know, these are some of our options people. I coach people on options all the time. That's not really what the purpose of today is, but we do help you with options. Some of the timing stuff I talk to people about is when to put on those covered calls, when to put on the cash secure puts to get stocks at a discount, how to get them on sale. So we talk to you about all of that. Here's from John. So John Malden, some of you are probably familiar with John. He's a big fan of ours. We're a big fan of his, just like John Carter. John Malden's a big fan of ours. Same reasons. It's because Marc has provided us with an edge in the market and an understanding, a high probability approach to understanding when to get in and when to get out of stocks. The screener I talked about, we have the options play, earnings. You can get involved with Chaikin Analytics today. We have a Black Friday special. We're going to give you access to our Market Academy, which is fantastic. These are classes that we run. My fabulous colleague Joe, who in his own right is doing quite well in our stock picking performance. It's nice to see Client Success is representing in our stock picking challenge that we have here at Chaikin Analytics. Joe does this. It's fantastic. It can be yours if you sign up tonight. I encourage you to do that. You should give us a call. You should talk to my colleagues. They'll walk you through exactly how to get started. You can have all this at your fingertips by Monday. Right? You could be in and up and running. You could be talking to myself on a coaching call next week. We could have you in an orientation next week. Don't miss this opportunity. I'll tell you, I'm sure many people have seen this in the market. You look at the opportunity, like I said earlier, you think it's on sale, and then it takes off and goes away from you. There are plenty of people out there. It's Black Friday. They're looking for sales. And they know that now's the time to buy because we've been conditioned to understand now's the time to buy. Well, don't let this opportunity, this Black Friday sale that Chaikin Analytics is providing you, don't let it pass you by. Take advantage of it and incorporate it into what you're doing because it really is a powerful, powerful thing. It's not just the platform. Marc mentioned John Schlitz, who is a analyst for us. He works closely with Marc. He puts out an email every morning, his Morning Insights email. Marc mentioned it. You get that as part of it as well. Marc himself writes every week a newsletter. I religiously read it. I'd be silly not to. It comes right to my email box Sunday evening, Monday morning. It's part of my Monday morning routine. Read the daily morning insights from John Schlitz. Read Marc's weekly email, run my screens, go through my process, boom, done for the week. Takes me very little time. And then you know what I do? I spend time talking with everybody out there, all of our Chaikin Analytics subscribers, and coach them and work with them on how to maximize what they're doing. All right. So don't miss this. I believe Marc's doing a bonus webinar next week. Marc, if you want to talk more about that briefly, coming up, he's going to talk a special bonus webinar available to people that sign up with me this today or this weekend. Or no, sorry, by today, midnight tonight. That's it. Midnight tonight. Get in on this webinar. I'll be listening to this webinar. Opportunity to hang out with Marc on a webinar. That's amazing. Plus the Chaikin Market course. Wow. All right. So anyway, call us now. The number's at the bottom there, 877-697-6783, or you can go to chaikinanalytics.com/black, and that will get you the ability to take advantage of this opportunity today. I look forward to working with many of you, answering your questions, helping you develop a plan, helping you have the best possible 2017 that you can. It's going to be a great year. There's a lot of good things, and you should just have the confidence that I have with it. You know, it doesn't take much, just Chaikin Analytics. So that's all I really have for you today. Marc, if you want to add anything, please go ahead. Joe, I really appreciate you helping me out. Joe's in the background. He introduced us. He helps me out on all of this. He's a wonderful colleague as well, helps me out with all kinds of things. So thank you, everybody, and be well.
All right, everyone. So thank you very much, Josh and Marc. Also, thank you so much for the presentation this afternoon. Just as Josh mentioned, again, $1,650 for a full year to Chaikin Analytics is just one single payment for an entire year's worth of access to Chaikin. If you access the chat window in the upper left-hand corner of your page, you'll see a link, as you can see on the left-hand side, that will take you to the order page. Again, automatically applied will be the offer code, $300 off for a full year to Chaikin, plus that special session just with Marc Chaikin. That'll be Tuesday of next week. So, but again, as Josh mentioned, only before midnight tonight. So we want to thank you all very much. We hope you had a wonderful Thanksgiving and hope you enjoy your upcoming holiday season. And in the meantime, enjoy yourselves. We'll see you on Monday. Thanks.